What's up, crypto enthusiasts? Welcome back to Wise Staking. I've got another awesome video for you. This time, we're going to give you an entire overview of the Wise token from beginning to end. If this is your first video you see on Wise, you're going to understand it by the end, and I'm going to explain things so that even if you're new to crypto, you're going to get it. So let's go over, first of all, the problems in crypto, because if you aren't into crypto or if you haven't used crypto a lot, it's probably because you're scared to death of losing your money. And that is one of the problems in crypto. There's so many bad projects on the market. First of all, there's just tons of scams out there, and people don't understand how to analyze crypto enough to be able to figure out which ones are scams and which ones aren't. You know, just because they have a slick website does not mean that it's going to be a good project. The second type of bad projects are greedy projects, and if you take away the scams, what's left is actually a lot of greedy projects. Bitcoin was the first crypto, and that's actually a non-profit. Satoshi Nakamoto, whoever that is, whatever organization that is, he isn't making money every time somebody buys crypto or mines crypto, and that's really, really important. That efficiency should have been carried on with all the other crypto projects, but instead, we got thousands and thousands of projects that were for-profit models whose only goal was to make the founders and the creators money, and the secondary goal was to help make other people money as well. That cuts out the feat from the entire efficiency of blockchain technology itself, because the most important thing about blockchain technology is that you can create a system on a blockchain with a smart contract, which is something we're going to talk about in a minute here. You can create a system that has $0 overhead cost. If you think about banking systems and all the overhead costs they have from, the actual brick and mortar banks, employees, stockholder, dividends, executives, everything they need to be able to pay out before the system actually can make money, that's a lot of overhead cost. Well, in crypto, you can actually put these financial systems that actually make money, you can put them on blockchain. You can put them on blockchain, and once you upload it to the blockchain and it's operational, it has $0 overhead cost. And that is what cryptocurrency should be capitalizing on, but instead we get a bunch of greedy projects who have like, oh, we're going to pay 50% profits to ourselves. Oh, we're going to pre-mine 80% of the supply and then just offer 20% to the community. Super greedy projects. That's just a way to lose your money. Even if the project is a good idea, it's just a way to lose your money if it's greedy. And then the last type of bad projects are just unsustainable. Because just because somebody makes a cryptocurrency does not mean that they know what they're doing. And it doesn't mean that they have designed it in a way that's going to last. And that's going to, because, these are new things and anybody can create crypto. Anybody that puts a team together or that can code can create a cryptocurrency. And there's just not enough knowledge and not enough understanding of how economic systems work. There's not enough skill in this area for people to actually create sustainable systems, and there are very, very few systems that are actually going to be around here, in 5 years, let alone in 2 months, when a new cryptocurrency is created. So the other type of problems in crypto are that the entire ecosystem is underdeveloped. So first of all, we have the lack of market makers. And luckily, some of these problems get solved, as we will see on the next slide. But without a market, it's really, really hard to grow. So even if somebody has a great idea and it's a great cryptocurrency, if there's not a market for it, if there's not people that want to buy it and sell it, and if there's not an easy way to create that market, then it's really going to struggle. And before, the only way to create a market was to pay a lot of money to get listed on a big exchange. And so, getting listed on Binance, I think it used to cost, maybe it still does, like $250,000 to get listed on a good exchange, which is absolutely ridiculous. And then that's just to get listed, let alone to actually have some people that will fill up the order books and buy it. And then the other part about the undeveloped ecosystem was just the lack of knowledge and lack of users. So with lack of knowledge, there's just people that don't understand how to figure out which ones are the good ones and which ones are the bad ones, and just a lack of users in general that are putting their money in crypto. So just to give you an example of what a greedy project was, this is Ample right here, Ampleforth, which was a cryptocurrency that launched a few months ago. It actually got to over $1 billion market cap. So you can see that even the greedy ones, people are still willing to put their money in, which is kind of ridiculous to me, and I'm hoping to raise awareness. But look at this distribution. Only 10% to the community. You have 25% to team and advisors. This treasury ecosystem seed investors, yeah, they all control that too. And then Series A investors. So basically, they are controlling 90% and only selling 10%. These guys got rich off of this, and people weren't educated enough to realize that yeah, you can make money on it, but this is super, super greedy project, and just there wasn't any better alternatives because everybody's being super greedy about this. So this is what this is one of the things that Wise is solving. The other problem with the lack of users and lack of knowledge kind of has gotten solved over the last few months, because this year alone, $11 billion have gone not just into crypto. I'm talking into DeFi, decentralized finance. Because there are these protocols, like I said, these systems that cost $0 overhead to run that are being made. Developers are making them by the hundreds every single week. And these systems can make you money, and they can make you a lot of money. And that's why so much money is flowing into DeFi. Now, unfortunately, 99% of them are scams, and it's really hard. And even the ones that are trying to be good ones usually do not have the sustainability. They don't have the tokenomics to actually last, because they're either hyperinflationary, they print out way too many tokens and it just tanks the price of their token, or there's just flaws in the entire ecosystem and they don't last. But the point is, there's a lot more money in decentralized finance now, and there's a lot more users, and every single time a scam comes out, people wisen up a little bit more, and you can already see in the last few months how people are starting to understand more and more what to look for when it comes to a good DeFi product. So there were problems in crypto, but Wise is the solution to the first one, being bad, just being a bad cryptocurrency, because Wise is raising the bar for what it takes to be a good cryptocurrency. So Wise, once it's successful, it's like, why would you go for another project? And we'll flesh that out in a minute here. But the point is, Wise is completely fair, completely safe, and it has tokenomics that are entirely sustainable. And we're going to go through each of those. But let's talk about the undeveloped ecosystem, because this is not the case anymore. We just talked about the $11 billion flowing into DeFi. But also, we have Uniswap. And Uniswap has revolutionized the way exchanges work. Because before, we just had regular exchanges. You needed to pay $250,000 to get on a good one. You had to have people putting orders for your cryptocurrency. To create a market, that means you need to have an order book with people that are buying and people that are selling. And the bigger your order book is, the bigger your market is. And if you didn't have a big market, then it kind of stinks to like nobody would want to buy your token, because you can't sell it. And so that was like a huge problem. Well, now we have Uniswap. Uniswap is a decentralized exchange, and what that means is, instead of having to give up custody for your crypto to put it on an exchange, which is terrible. I never want to give up control of my crypto. There's been exchanges that have been hacked, money stolen. You don't want to do that. So instead, this is just a little protocol that swaps the tokens while they stay in your wallet. So for instance, this right here is a Chrome browser extension, MetaMask wallet. This is the most common Ethereum wallet that people use. And by the way, Ethereum is like money in crypto. like a base money in crypto, like Bitcoin, except you can do a lot more with Ethereum. So you see, I have Ethereum here. I have some wrapped Bitcoin here, USDC, some other stuff as well. But this is my wallet, and so I have control of this wallet. Like if you want to install one yourself, you just go to the MetaMask Chrome browser extension. It's going to show you 12 different words, which is like your nuclear launch codes. Like if anybody gets those 12 words, they're going to be able to access your money. But if you write those words down and you keep them safe, that's like your keys to be able to put log into MetaMask anywhere on any computer and have your money right there. So this is your wallet, and this Uniswap interface means that I can swap between different types of cryptocurrency. So you can see this is swapping between Ethereum and USDT, which is a stable coin. So 1 USDT equals $1, 1 US dollar. And you can see I have some balance of Ethereum. I also actually have USDT, but right here I could actually swap, and I could buy more USDT, or I could buy pretty much any other asset I want. So this is an exchange, but the cryptocurrency stays in my wallet. It doesn't go anywhere, and it's completely safe. So this revolutionized things, because to buy this money right here, if I want to trade my 3 Ethereum for $119 worth of Tether, well, I can do that, but the way I do that, it's not because there's people there who have orders. That's not how this works. It's actually a big pot of liquidity. It's a big money pool. So if we go here, you can see that there is liquidity pools. And so here was the one that I was trading right here. There's actually $537 million, which is half in Ethereum and half in Tether. So people can, there's $500 million in this liquidity pool that's half Ethereum and half Tether, and anybody can trade Tether for Ethereum or Ethereum for Tether instantly. And when somebody does that, then if I were to sell a lot of Ethereum, well, then the price would start going down. So it's a market maker of its in and of its own. So that's what Uniswap is, and the fact that there are these liquidity pools revolutionize the game, because you can, like, these are very common cryptocurrencies. But what about new cryptocurrencies? What about the cryptocurrency that before I had to pay $250,000 to get listed on Binance or something? Well, now, as long as I have a pot of money, I can create a pair on Uniswap, and boom, I've got an instant market. However big I want it, however much money I have to be able to contribute to the market, I can add to that pool of liquidity so that anybody else can exchange through that pool of liquidity, either buying or selling. So that's pretty awesome. And the reason why people are incentivized to provide this liquidity is because every time, this is a lot of money, right? There's like $3 billion on Uniswap right now, total. The reason why people are incentivized to do this is because every time somebody trades, there's a little fee that's paid. And that little fee gets split between everybody who is providing this liquidity. So that is pretty awesome, because if you just have cryptocurrency sitting in a wallet, I have cryptocurrency just sitting in a wallet right here. And it's not like this Ethereum isn't making me more Ethereum, but if I had it in a liquidity pair, it would be making a little bit more. And some of these pairs, they're great ROI. They're like 10-20% ROI sometimes, depending on which pair you do. So that's an awesome, that's a really cool thing. So these problems that we had in cryptocurrency are now solved. Now we've got a lot more money in crypto, a lot more users in crypto, a lot more knowledgeable people about crypto, and now we can instantly make a market as long as you have the money to create the market. So now all we need is a fair cryptocurrency. But before we talk about fair, let's actually talk about safe, because you don't want all your money to be lost because something is completely unsafe. So Uniswap, what we were just looking at, and Wise, they're made up of smart contracts. And so smart contracts, there's like a description here. Smart contracts are self-executing contracts with the terms of the agreement between the buyer and seller being directly written in the lines of code. Smart contracts render transactions traceable, transparent, and irreversible. So smart contracts, you can create an entire system on a smart contract, which means that the system is going to operate the way it was designed. You can upload it to a blockchain like Ethereum, and once that is uploaded, it is immutable, which means it's unchangeable. You can't do, like, nobody can change the system. So for instance, Bank of America could change the way they do things. They say, hey, you know what? Now we're going to be charging instead of $25 charging every time you do a wire, we're going to charge $100 every time you do a wire. And you know, banks change things all the time. You know, they change things about the system. But smart contracts, once they're uploaded, as long as there's no admin keys, they are immutable and they can't be changed. So that's the awesome thing about blockchain, is because even if you don't know anything about the founders or who created it, if you can see the code and you can read what the code does, and it's a smart contract that doesn't have any admin keys, that means that that system is going to operate the way it was designed to do, and there's nothing anybody can do about it. Nobody can ever change it. And so that is why Wise is created, you know, as a smart contract with no admin keys, because it is a 100% complete system that does what it's designed to do. And nobody has to trust me or anybody else. You know, the developers of Wise don't have to trust any of that, because it's done. It's complete and it's immutable. There's no admin keys and no one can ever change it. Now, there is a caveat to that, because sometimes something can be immutable and not have any admin keys, but there could be a bug in the system and it could even be a serious bug, a loophole that allows people to somehow take money out of the system, or you know, could be catastrophic for the entire system. And that's different than like a scam, but it's still just as bad, because you know, you lose your money either way. And that is why audits are so important, because you know, third-party audits are done by, you know, a third-party company that goes over every line of code, that knows what they're doing, has multiple people looking at it, and understands how it works, and just double checks to make sure that there aren't any loopholes that could break the entire system. And so Wise does have actually two audits, two third-party audits, as well as all the self-tests that we did. So we know not only is it a 100% completed system, it's immutable with no admin keys with two third-party audits. If you compare that to pretty much every single other crypto being made right now, that's not the case. You're going to find things that are not immutable, they have admin keys, and they're not audited. They're kind of just like launching and then, you know, going with the flow. That's kind of like the norm in cryptocurrency right now. Well, Wise didn't do it that way. Wise, you know, we took a year to first design and then build the code and then get it audited. We did everything the right way, and that is why we are able to you know, burn the admin keys, make it immutable, and be completely comfortable feeling that, you know, what we have created is safe and it's going to do exactly what it's designed to do. So it's a decentralized system, and not only is the code part decentralized, but sometimes, you know, other projects can get you. And the way they get you is they say all these things that I just said, you know, immutable, burn the keys, blah, 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 but they control the supply. So it's one thing to have like, okay, we can't change the contract, we can't change the way it works, but we already hold a lion's share of the actual supply of the token in the first place. So that's just as bad, because, you know, if you control a lion's share of the supply off the get-go, especially if it's for free and you didn't even have to pay for it, then that's a way worse system than something that is a fair distribution and you know, decentralized in that way. So Wise team holds no tokens. Everything is completely fair, and we're going to talk about that in a minute right here. In fact, let's get right to it. So Wise is a fair launch, and if you look at other cryptocurrencies and how they launch, man, so unfair. They have a pre-sale, they have a a pre-sale to the pre-sale. Private investors can get in. You like all these rounds of investors that get special treatment. Rich people and rich organizations who are allowed to get in and get a much better price. So you're already holding advantage over the rest of the community. That's completely terrible, absolutely terrible. Also, projects that set the price for their own token at launch, which is a terrible thing to do because you don't know what it's worth. You don't know what it's worth, so you have to let the market set the price. So Wise does it very, very, very differently. We have auction pools, which I'm going to show you right now, actually, and everyone competes equally. Any Wise I get, I'm paying the same amounts as other people pay. We all, maybe I get a better rate if I go in on a better day than they do, but they had the same opportunity to go on that day too. So let me show you what I mean. If we go to the reservations tab of Wise, you can see that there's all these tabs here. These represent auction pools. There's 50 of them. And every single day, starting on November 11th, there is about 5 million Wise available to buy. And you can send money, you can see the Ethereum that has been sent to any of these 50 days. And, all these days are open right now. But they're going to start closing down starting November 11th. So you can see 28 more days until November 11th, 29 days until November 12th. These days will close down. So when a day closes down, it's going to distribute the Wise available to everybody that sent in Ethereum proportionally. So obviously, if that's the case, then that means you want to get in on the days that have the least amount of Ethereum. But it also means you don't really know what it's going to be, because this day could close at 187, and then it closes, and then in those 24 hours, there could be 200 Ethereum that gets sent to this day. So you won't really know. There's kind of a game aspect of it. And if you want to just avoid the headache, well, it's really easy. You can just connect your MetaMask, and then you do reserve Wise, and then you can just do select all days. Boom, you can put in however much you want to put in, and it spreads it out all over 50 days. And so you will get the average price. So that's how Wise's launch works, and that is a fair launch. That means everybody has an equal chance, and it's being sold at market price rather than having these unfair advantages. The second thing about our launch is that 90% of the money is actually sent to Uniswap. So if we go back here, all this Ethereum is being sent. There's, if we look at the dashboard right now, there's 1,689 Ethereum. So that's more than $600,000 that is being sent in total. And so the question is, where does this money actually go? There's other projects that they take the money. Remember, in that first slide we looked at, like there's other projects that say, okay, all that money, okay, you just that's my money. You just bought the cryptocurrency, and so they take that and they pocket that, and they're like, thanks, and then they run off, or they spend it on their yachts or whatever. Usually in a project, the money doesn't actually go to backing the project. It doesn't go to backing your investment at all. In Wise, 90% or more does. It's probably going to be more like 99%, but at least 90% of the money goes to directly backing up the value. So if we remember Uniswap, Uniswap is the market maker. All that Ethereum, 90% or more of it is going to Uniswap to create the trading pair for Wise and Ethereum. That instantly creates the market. And then once it creates that trading pair, that big pot of liquidity, that's pretty much all the money that people sent, then the contract burns the keys, which means that no one can ever take that money away. So let's actually look at Uniswap info. So we can actually see the different pools, because there's a big difference than having a lot of money on Uniswap and then having ownerless liquidity on Uniswap. So we can see we've got $3 billion of liquidity right here. You can see some of the biggest pairs. This is how much money is sitting on Uniswap, but somebody owns all this money. So when Wise puts, whatever it is, $100 million on Uniswap, it's going to burn the access to that so it can never be taken away. Because something that happens nowadays is that people will create liquidity, they'll create liquidity, and it'll be awesome until they take it away. And then that completely destroys the value of the token entirely. So that is something that is done. It's called rug pulls, because you're kind of like pulling the rug out from people, and it completely destroys the value. We can't do that. Like it's not even possible to do that, because it's a decentralized system that puts the money on Uniswap as a trading pair. And the cool thing about this means that, if you put money in to buy Wise, there's always going to be a market to be able to cash out Wise, because your money is there, and that pot of money is only growing the more and more people buy Wise, and that just increases the ROI for everybody, which we are going to talk about in a minute. All right, so let's illustrate what we just talked about. This is a mountain climber, and this is a mountain of money, and this is a rocket ship going to the moon. So this mountain of money represents launch. And so the way most people view launch is, all this money comes in, and it gives the token a certain amount of value, and then they want people to, after it launches, to buy afterwards, so that the price goes to the moon and everybody can make 100x gains and stuff like that. The only problem is, let's say $10 million were sent in for this ICO or whatever. The problem is the $10 million doesn't actually go to backing the token. So the token doesn't start at a $10 million valuation. And if you invested yourself $1,000, that $1,000 is gone, because, the founders used it to line their own pockets. The founders used it for marketing. The founders used it to do other stuff. The founders use it to create the token itself. So usually when you buy a token, you are behind. You're really, really behind, because remember, the founders have built in themselves a golden parachute, and they're going to make money way before you make money. So the project doesn't have to. The project has to be even more of a success before the actual regular users make money, because they're all designed so that the founders and the creators make money. So you're not starting from this mountaintop right here. You're starting from way behind, and the money that you put in actually doesn't go to back in the token. So in order to recoup your money, let alone make an ROI on your investment, there has to be a ton of people coming in and joining the project after you until you even break even, let alone get on that rocket ship and go to the moon and make sick gains. So with Wise, you're actually starting from the top of that mountain, because the money that gets sent in gets put on Uniswap, which instantly creates a market, which instantly gives Wise a value, because obviously it's valuable if you can cash out for X amount of Ethereum. You're starting from the top of that mountain, and that means that everybody that joins Wise afterwards, and as our marketing works and as our referral program works, we're going on that rocket ship to the moon, and it's much, much easier to be able to 100x if you're starting from on top of the mountain than if you bought into a project but you're actually starting at the base of the mountain, because you don't have to climb the mountain first with Wise. All right, so let's talk about value a little bit, because I think people misunderstand how value is actually created in crypto, and I want to explain to you how Wise actually creates value. So one of the biggest ways people think about creating value in crypto is through lending. So we've got these sites like Compounds, these crypto sites like Compound. There's like Aave, MakerDAO, and these are lending protocols. And the idea is that there's crypto is in demand, and so if you're able to basically be a bank and offer lending services, well, then you can pay people interest for, adding to the treasuries of this lending pool. And so you can see, like over here on Binance, you can make 13% ROI on Bitcoin, 15% on Binance Coin, 16%, 12%, 12%. So you can actually make pretty decent ROI, like usually higher than the stock market, if unless you're super lucky, with lending protocols. And this is absolutely awesome. Another way is to make it on transaction fees. Now, we already talked about Uniswap. Every time somebody does a trade, there's a transaction fee. And so there's money that comes from transaction fees. So that's creating real value. Another way is through arbitrage trading. So if you are holding a token or a coin and the value goes up, well, then you will have made money from arbitrage. And then the other way is by having a large market. So having a large market in itself creates value because it allows people to be able to buy in and cash out without massive amounts of slippage. If you think about Bitcoin, one of the reasons why people will invest millions of dollars in Bitcoin is because you can invest millions of dollars of Bitcoin without worrying about slippage, investing $1 million, but it actually is only investing $80 million because there's not enough of a market to be able to supply your demand. And they're not worried about cashing out because they know the market is there to cash out as well. So, Bitcoin has over 200 billion market cap. We've got Ethereum has over a $40 billion market cap. Having a large market invites people to buy in and buy out with large amounts. And when they do that, when they put large amounts of money and feel safe putting large amounts of money in your asset, well, that increases the value. That's the only thing that increases the value, more money going in. But one of the biggest things that's overlooked, I think, in crypto is actually adoption. Because like I just said, having people put more money in your asset is the biggest way to create value. It's really the only way to create value because, it doesn't become more valuable until people buy it. If you were to think about if there was some catastrophic thing that happened in America or, the US dollar could become destabilized if one day everybody decided, I think the Mexican peso, I trust that a lot more than the US dollar. I'm going to sell my US dollars and buy Mexican pesos. Well, then value would go out of the US dollar. It would tank. The actual buying power of it would tank, and the buying power of Mexican pesos would go up. Same thing with gold, silver, Bitcoin, any other asset. So adoption is absolutely key, and if you're going to make a sustainable crypto and you want to make a cryptocurrency that goes up in value, you need to have a plan for adoption. So let's go ahead and look at Yearn Finance right here. So Yearn Finance is just a protocol that lends out big pots of money, treasuries of money. People can contribute to the treasury, and Yearn farms it out to different protocols like this, Aave and MakerDAO, those type of things, to make about an average of 14% a year, maybe a little more, maybe a little bit less. However, this token went from under $1,000, $34, all the way up to $43,000. So if you're only able to make 14% a year on interest, where's all this value coming from? Well, obviously, it's coming from adoption and people speculating on the fact that the protocol works, so they want it more and more, and they create that demand through adoption, through buying it, and that drives the price up. So people think, oh, well, cryptocurrencies have to have a use. Well, let me tell you something. Bitcoin doesn't have a use. Bitcoin doesn't create value the way a lot of people think things create value. Bitcoin, it's just money. It just is. It's a ledger of money, and it works very well for what it does, which is being a store of value and money. But it doesn't have a use. There's no the Bitcoin system doesn't lend out to other protocols to make money. The Bitcoin system doesn't have transaction fees on other exchanges. Binance doesn't send money into the Bitcoin system to create value every time there's a transaction that's happening. So a lot of people misunderstand this, but really the most important thing is adoption. Now there's two categories in here that Wise deals with, and one is having a large market, because remember, all the money is going onto Uniswap. We create an instant large market just like that on Uniswap that cannot be taken away, and that's really huge. And the other one is adoption, which is through our referral program, which we'll talk about in a minute. But let's talk about having a large market, because the idea of locking up a ton of money that can't be taken away is a very new concept. Like I believe that we started it back in November of 2019 when we were formulating the ideas of Wise, because ever since we came up with that idea, there's only been a couple people that have done something similar. And one of the best ones was actually CVault Finance, or the Core token. So the Core token locks liquidity. In order to participate in the system, it's a yield farming system, but you have to lock up your liquidity permanently, forever, like not being able to take it away. And this token went from hundreds of dollars all the way up to almost $10,000, just above $9,000. And you see, when it dumped, it did not dump that hard compared to other systems that were exactly like Core, and the only difference was there wasn't any locked liquidity. People could pull their liquidity anytime they wanted. So you can see, yeah, it has been going down. The initial hype has worn off, and they also don't have a referral program, so I think that it'll lose steam eventually. But the point is, this chart compared to other charts, it's night and day difference. Other charts, crash down to almost zero. There's hundreds and hundreds of charts that have the same tokenomics as Core that still crash down to nearly zero. And just the fact that you locked up liquidity forever it's protected it from the downside significantly. So in addition to locking this liquidity up on Uniswap, we have an amazing referral program. So Wise is a nonprofit, and so it's necessary for us from the marketing perspective to have a referral program, and we have an amazing referral program. It's actually the best referral program in crypto. Anybody that uses a referral link, makes 10% bonus Ethereum when reserving Wise, and 10% more shares when staking. So that's your interest earning power when you're staking the token. So this means that it would be really silly for anybody not to use a referral link. So referral links are in demand because everybody who uses it gets 10% more every time they use the system. And if you are the one creating the referral link, which anybody can create, you just connect your MetaMask and boom, there's your referral link right there. Anybody who creates a referral link, as long as they refer at least 50 Ethereum total, then they will make 10% commissions, which is pretty amazing. You refer $1 million, boom, you make $100,000, decentralized, easy. There's no, KYC, know your customer. All you do is promote the system, and the system will give you benefits in a completely decentralized way. So this is absolutely amazing. And also, after this is over, like after our launch is over, the referral system continues to work, and it continues to reward people who stake. So if you're a referrer, you can continue to promote your link and explain to people how staking works, why you would want to stake, and provide support in that area. And the people that continue using the link will be giving that guy interest every single day. So this is an amazing referral program that incentivizes people to talk about Wise and to bring more people into Wise, and the system only has to pay out 10% for that. So imagine this: if you are a referrer who has a big audience and you refer $1 million, if you make $100,000 referring. You would think, oh no, that you just made free money that you could dump on the system and it might crash the price. No. In order to make $100,000, you have to refer $1 million. So that's a net positive of 900,000 or 9x. So our referral program not only pays great commissions, but it's a huge benefit. Anybody that decides to promote is a huge benefit to the entire system. And it's a net positive of 9x every time somebody talks about Wise and gets more people to understand how Wise works. So that is pretty crazy compared to other companies who suck profits from the system and then use up to 45% of those profits to pay for marketing, which isn't really effective at all compared to paying commissions on actual referrals, because the system won't pay you unless you create the money coming into the system. So I've explained to you the tokenomics of how the launch works, and now let's talk about staking. Now, I don't have the staking dashboard up yet because we're not in that phase yet. But the way staking works is you lock up your Wise. Once you buy it, once you do the reservations and buy it, you can lock it up for a period of time, anywhere from 1 day to 42 years long. You can lock it up for however long you want. And while it's locked up, you will be earning interest on that money. The way it earns interest is through inflation, because the entire supply of Wise inflates by 4% per year. Now, what do you think about inflation, by the way? Inflation is actually a really good thing. I know we think about inflation, we think about the US dollar inflation, which is terrible because that's starting to be hyperinflation. But the main thing is we don't like that type of inflation because the money isn't coming to us. It's coming to the banks and the financial system. Inflation is actually good if the money is coming to you. And so Wise has a sustainable amount of inflation, just 4%. I'm sure a community is going to be growing by more than 4%, which would more than cover the loss of value every single year. So it inflates by 4%, and that money, that extra Wise that's printed, is rewarded to people who stake, and a little tiny bit to the referral program as well. But mostly, to people that stake. So every time you stake, you can be getting some of that interest, but so can everybody else. So you're actually competing with other people, so that the more people stake, the less interest you get. However, there's a silver lining to this cloud, because the more people that compete with you, actually the more money you're going to be making. Because in order to stake, you must burn your Wise. The way the process works is to create a stake, you burn your Wise, and then you trade it for shares. That's your interest earning power. And you have your shares for the duration of the stake. But you've got to burn your Wise, and burning removes the supply from the system. It makes it scarce, which drives up the price when it's in demand. So in order for somebody to compete with you, making you earn less interest, they have to drive up the price of Wise, which means that when you end your stake and cash out, you're getting more money. So let's go ahead and look at the ROI rates here. So Wise can create massive ROI. We've already looked at how, compared to other tokens that start from here, Wise starts from on top of the mountaintop, making it super easy for the price to pump and for people to make tons of ROI, because the money is going in a place that is for your benefit rather than not for your benefit. Way better. So the ROI that's created is not really from the interest. Like, the interest helps, and the interest gives you more money compared to other people who aren't staking in the system. But the real ROI comes, the 100x, 1,000x, maybe even 10,000x someday, soon hopefully, will come over time as people join the system and the entire system grows. Because the big exponential returns are actually coming from the wave of people that's coming into crypto. At the beginning of this presentation, you saw that 11 billion came into crypto just this year. The last 3 months, it was the majority of that. So this is just the tip of the iceberg. There is a huge wave of money coming into crypto, and the money that makes it into Wise, the money that gets invested into Wise, that increases the market cap, which increases the price of Wise, which increases the ROI for everybody, giving everybody exponential returns. So this is where all the value is coming from. This is where that 10,000x can come from. Now, yes, the interest is great too, but that's not going to be 100x returns every year. No, we're talking like maybe 10 to 30% returns, depending on how many people stake. The big ROI comes from the wave of people coming and joining, Wise and putting their money in Wise, and that is where the exponential returns come. So you're going to want to get in before this wave happens, because Wise is going to continue to be awesome. Even when there's $1 trillion market cap for Wise, it's still gonna pay out great interest. However, 10,000x returns are not going to be possible when it's at $1 billion market cap. Billion, trillion, even once it gets to $100 million market cap, it's going to be pretty hard to get 1,000x, 10,000x returns if you're starting from there. Here, you're seeing this video right now. I've explained everything to you. I've explained, how it's fair, how it's safe, and why the world. And I've shown you how the world is pouring their money into this. It's just the tip of the wave. There's trillions and trillions of trillions of dollars that are going to be coming into crypto. The entire market cap is only a few $100 billion right now, less than $300 billion right now. So we're just at the tip of the iceberg. There's tons of money coming in, and this is one of those projects that's actually sustainable, is that because it's fair and it can give you great return on your money. So this is one that you're going to want to get in earlier than later. So come on over to Wise. If you need a referral link, just use wisestaking.com. That's my referral link. Definitely, if you're going to invest more than 50 Ethereum, or if you have a big audience and you want to create your own referral link, create your own referral link. But if you need one, you might as well just use mine. You're getting 10% either way, and it's wisestaking.com. So that's going to be it for this video, guys. Thank you so much for watching. Don't forget to like, comment, and subscribe, and I will see you in the next video.